Are you ready to take a bite out of the competition? Are you looking for ideas to make your business better? Welcome to the Core Business Show with Tim Jacquet,
sponsored by Apple Capital Group.
At the core of every successful business, you'll find people making a difference. And with each episode of the Core Business Show, we talk with those people, examine those ideas, and explore the strategies that make them special. Now, the host of the Core Business Show, Tim Jacquet.
Welcome to another episode of the Core Business Show. I'm Tim Jacquet, your host. Today we're going to talk about account receivable financing or invoice financing, some people call it. We have a special guest today, Tina. She's with Orange Commercial Credit, and we're going to actually spend the next 20 minutes talking about factoring and what it can do to grow, factoring can do to grow your business. We're going to take a commercial break real quick, and we'll be back in 1 minute. You're listening to the Core Business Show. I'm Tim Jacquet, your host.
You're listening to the Core Business Show, sponsored by Apple Capital Group. Apple Capital Group in Jacksonville, Florida, is a commercial lender that specializes in asset-based loans, equipment leasing and financing, invoice financing, commercial real estate loans, and asset-based financing in the U.S. and Canada. Apple Capital Group is a direct lender that lends on their private equity investment portfolio. 90% of most loans are decided within 2 hours, and vendor funding within 24 hours after documents are completed, with a one-page application. No slow no's, just a quick decision and a fast yes. To get more information about lending from Apple Capital Group, call 866-611-7457. That's 866-611-7457 to speak with one of our loan specialists. Or visit us right now at applecapitalgroup.com. Welcome back to the Core. Once again, here's Tim Jacquet.
Again, we have Tina Cawthorn, Business Development Manager there at Orange Commercial Credit. Tina, welcome to the program.
Hi, Tim. Thanks.
I guess to begin with, our listeners really love personal stories, how people actually get into the industry. So kind of tell us about yourself, where you're from, and how you actually got into account receivable financing.
Sure. So I'm born and raised in the Portland area, Portland, Oregon, and got into commercial finance a long time ago and started really in equipment leasing. And the company that I worked for had different segments of business, and one included more of a working capital lines, and I was asked to join that group, and that's how I came to know about invoice factoring. It's known by lots of names, as you alluded to already, receivable financing, invoice factoring, what have you. But I kind of stumbled into it.
Wow. Kind of tell us, what's the history behind really factoring? Why people actually get into, and we know why they need the factoring, but kind of tell us how this really began.
Yeah, well, invoice factoring, honestly, is, I think, the best kept secret in finance out there. A lot of people don't know about it and are surprised to learn about it, and especially the fact that it really dates back to the early colonial times when, the English colonists, when they came to America, they began to turn to bankers to advance them funds so that they could buy goods and what have you. And it is in the early 1900s, then it became very popular in the garment and textile industries, and has evolved over the centuries, if you will, to be what we know it today. And truly what it does is help accelerate the cash flow of a business. So any business that generates invoices, extends payment terms, and is looking to maybe get paid more quickly instead of, oftentimes your vendors will need those payment terms, but you begrudgingly have to extend those to get their business. So in essence, what they do is offer those payment terms, but then send their invoices to a factoring company who provides immediate funding on those invoices, thus accelerating the cash flow of the business, and then the ultimate debtor then remits the payment to the factoring company instead of direct to their vendor.
Okay, so basically, if you're looking to factor, is there certain businesses that's really, the garment industry is pretty great, but are there certain businesses really targeted for this, and are some businesses really not a good fit?
Yeah, that's a great question, and today it is a product that is commonly used in various industries, and the one that our company, Orange Commercial Credit, specializes in the industry that I think it is most predominantly used in, is the transportation industry. If you think about it, those guys move the load, they typically have to wait 30 or 45 days to get paid. Meanwhile, they have a lot of overhead, and the biggest one being fuel expense. They have to, keep those trucks moving. So they will factor their invoices to keep that cash flowing and the trucks going, if you will. Other industries that it works really well in and is widely accepted is the temporary staffing industry. In that industry, usually the staffing agency has, 1099 employees that it's sending out to perform the work, and those employees like to get paid weekly or every other week. However, those staffing agencies aren't collecting from their customers for at least 30 days. So it works well in that industry as well. Also, any type of manufacturing or distribution, really any service industry that is extending payment terms and generates an invoice, doing business-to-business transactions.
Wow. So when it comes to that, those particular businesses, are there some businesses that are really not good fits for factoring?
Well, as you might imagine, many factoring companies across the United States, and most of us have our own niche or specialty. And for Orange Commercial Credit, it is the transportation industry followed by staffing. One thing that we don't get into here much at Orange Commercial Credit, but it is definitely factorable, are government receivables. I mean, there are definitely factoring companies that specialize in that type of an environment, as well as construction. We just don't have the specialty within our group to do a lot of factoring for the construction industries. There's lien rights issues and all kinds of other things that limit us from going into that industry. However, there are definitely factors out there who do factor those. So I think any industry that's interested can find a factoring company that will assist it.
So if we kind of take it from stage to stage, so what is usually how this process works? I mean, they contact your company, for example, and then from there you take an application and kind of walk us through that step-by-step process so they know what to expect.
Sure. And it is a very simple and easy process. Most factoring companies follow the same setup procedure, and that would be a basic one-page application, tells us about their company and tells us about their customers, because the most important thing in invoice factoring is not the credit strength of your company or the ownership of your company, but the credit strength of your debtors. They're the ones that are going to be making the payment to us. So we do deeper dive, if you will, on the credit strength of those debtors. And so we ask our prospects, who are the top 3 customers that you think you want to factor? And then we go out to check published reports to set credit limits on each of those debtors or, the client's customers. And once we get the application, then we do that due diligence. Typically within a few hours, we're going to issue a term sheet or a proposal detailing the rate and structure that we're offering to our prospect. And if they accept the terms of that, then we prepare the actual security agreement and we email out the documentation to them for signature. Once they sign the documents, then we're ready to start buying invoices. And we at Orange Commercial Credit will buy aged invoices. So if a company has receivables that they're waiting to collect on, they can submit those invoices back to us with the documentation, and we will fund on those aged invoices. And that can be real helpful for people, customers that might be looking to maybe make a equipment acquisition or something, and banks aren't lending to them for whatever reason, or other entities that they may have turned to. So what they can do is turn to their receivables that they're waiting to collect on, factor those invoices, and get the cash to accomplish those goals.
So again, it's not based on the business credit. It's really based on their receivable credit, their customers themselves.
Yeah, we do ask for owner-officer information on our application, but our pricing is based largely on the creditworthiness of the debtor. And unlike banks or other types of traditional financing products, it's not a debt to the company because you're trading one asset, which is your receivable, for another asset, which is cash. So it truly is off-balance sheet financing. It does not create any debt to your company. We never ask for financials or anything that you have to. Bank products will require you to submit those quarterly. We don't need those. We just rely on the credit strength of the ultimate debtor.
So the debtor and staff, what are you actually looking for when it comes to the debtor that they actually need to know ahead of time when they actually establish that relationship?
Yeah, we go out and we pull published reports to see, very similar to Dun & Bradstreet, but there's other databases that we go to, and we're just looking to see what's being reported out there as their high credits and their average turn times. Obviously, the longer it's going to take them to pay, then the higher our pricing has to be, the longer our money is potentially going to be out the door. So that's why we take a look at that.
So how old the receivable can be? An example, when you get ready to purchase, I guess, an existing business portfolio, could they have like a 60-day or a 90-day, or there's a cutoff?
Well, here at Orange Commercial Credit, ours is a recourse product, which means we buy the invoice for a specified period of time, and that is typically 75 days. So we look to credit approve customers, debtors that are paying within 60 days, because recourse isn't something that is productive for the company, and we're here to help them grow. So if we pull a report and we see that their customer is going to take 120 days to pay, then that's probably one that we're going to tell them we're not going to be able to factor. Or alternatively, what we would do in that scenario is what we call age the invoice. So we could say, okay, they're going to take 120 days to pay. When you send the invoice to us, we're going to go ahead and get it out to your customer so that they can start processing it, but we're not going to advance you the funds on it, and therefore it's not going to start costing you any money for 30 days or whatever the agreed period of time is down the road. And then if it's 30 days, then we'll say, okay, 30 days have passed, now we're going to advance you the funds, and the clock starts ticking here as to how long it's going to take their customer to make the payment to us. So there are some creative ways we can get around those debtors that do seem to take longer to pay.
Okay. We have 4 questions here. When you talk about recourse, can I tell us what recourse is?
Yeah, so what it is basically is we buy the invoice for the specified period of time, and here at Orange Commercial Credit it's 75 days typically. There are some instances where we'll go beyond that, but let's just talk about 75 days as the recourse period. So we buy that invoice for that agreed upon time. If the customer or the debtor doesn't pay within that period of time, the invoice is sold back to the customer, but that's not a situation where they're ever going to be sending money back to us. We do typically advance a percentage up front on the invoice value, typically about 90%. It does vary depending on the industry, but on average it's about a 90% advance. So we have a 10% reserve pool that we have set aside, and we release those reserves then twice a month during the first and the third week of the month when we get paid. So if an invoice goes past the 75 days before we release that reserve pool, we would satisfy that one invoice from those funds. Now keep in mind that recourse is something that we do try to eliminate. We don't have a high rate of that happening here at Orange because we do credit approve those that look to be paying within 60 days. Sometimes there are disputes and things that happen. We do have a team of collectors here. So the collection process is a service that comes along with factoring. Our collectors pick up the phone at day 35, and they're calling to make sure that the invoice was received and follow on those promises to pay then. So if we're not getting any response or they're saying there's a dispute, once it goes past that 75 days, then that recourse would happen. If we are getting promises to pay and it does seem to the collectors that there is an effort being made to satisfy that invoice, sometimes we will go beyond that 75-day period. It's just kind of a case-by-case scenario.
Are there some unusual situations that you see that, I guess, some bad stories, or I don't know how you really have to put the word, some things that you guys, some cases that's really unusual that really comes up in the course of, I guess, with companies? I'm not sure if it's fraud or a company go out of business, what do you do in those particular situations? I mean, you have the reserve funds, but is it a certain case that just really out of the box that really stands out to you that sometimes does come up, or unusually sometimes comes up?
Yeah, we here at Orange have a very seasoned staff. Our company is almost 40 years time in business, and our staff has been with us for, most people more than 10 years. And so we're very good at our upfront due diligence, setting those credit limits, and then our back office support people do a really great job, too, on the collection efforts and what have you. And we have an extremely low, like less than 1% write-off situation here at Orange. It's extremely low. And I just really can't think of any situation extreme like you're talking about, because we do have a lot of safeguards in place that help our clients grow their business in a positive fashion.
Okay. 2 other questions real quick. One is regarding government and municipalities. Do you actually factor those invoices?
We don't, but I know companies that can help with that. If someone has a need for that, I'd gladly make the referral.
Okay. A question here regarding PO financing. And what is PO financing, and how does it work with accounts receivable financing?
Yeah, so PO financing stands for purchase order financing, and it is different from factoring. Purchase order financing is up front before the service has been performed. You might get a purchase order, but you need to finance some of that so that you can get the raw materials or what have you to make the product. We don't do that here. Invoice factoring is after the product has been delivered or the service has been performed, and you actually are generating an invoice. Now, they do oftentimes work hand in hand with each other, because there are companies that do the purchase order financing that will want a factoring company on the back end to take them out. So once the product is delivered, the factoring company will produce the funds against the invoice, and then the purchase order company will be paid from those proceeds.
Is there a special risk or a special companies actually that takes the risk to do the purchase order financing? If it's raw materials, the items have to be built. There's a time frame there. Is it more riskier because then you really subject to that item getting built or that item overseas to get shipped?
Yeah, it is a riskier product, in my opinion. I don't have any experience with it, so I can't talk about the details of it, but it is my experience, and I have been told it is riskier for obvious reasons, and therefore it is typically a more expensive product.
Okay. Let's see, I think that one's been answered. Kind of tell us about your company itself. I know you mentioned you guys have been around for many, many years. Kind of tell us about your company, what products that you offer, how can we contact you, so forth.
Yeah, gladly. So Orange Commercial Credit is about a 40-year-old company. We're privately held, and we do specialize in the transportation industry. However, we do have many other industries on our books as well. We're headquartered in Olympia, Washington. The name Orange Commercial Credit, people tend to think we're in California or Florida, and it's true. We used to be in Southern California. The owner of our company actually had 3 smaller factoring companies with different partners, and he merged all 3 together, bought out his partners, and relocated to one of the facilities up in Olympia, Washington. We do have business development officers such as myself across the United States, and I am out of Portland, Oregon, but I do handle business across the United States, so any call made to me would be handled by me specifically. Is it okay to give my contact information?
Yeah,
Tim,
absolutely. Yeah, how to contact you and website.
So anybody looking to reach out to me, well, you can find us on the web at www.occfactor.com, or me directly by phone at 888-266-0211, and by email at tcawthorn@occfactor.com.
Okay, 2 last questions. Do you lend in Canada, and do you also factor with startups?
We do startups, and we do a lot of startup truckers, as a matter of fact. And the greatest success story, unfortunately it was not my customer, but one of my counterparts had a customer that was a startup that has grown to, I think he's got over 200 trucks now in his fleet, and he continues to factor because it is so quick and easy, a simple product to use. As far as factoring in Canada, if the debtor is in Canada, we cannot do it. It has to be U.S. funds. But if our customer is Canada, but he's doing work in the United States and invoicing in U.S. dollars, we can entertain that. Again, I do have affiliates up in Canada that I can make those referrals to for businesses that are looking to factor that are located and working in Canada.
Okay. And what about U.S. territories like Puerto Rico?
Yeah, we're the continental U.S.
Okay, within the continent. Okay, that makes sense. Well, kind of give us your contact information out one more time, your website, and how to reach you.
Yeah, Yeah, the best thing is my phone, which is toll-free, 888-266-0211. That'll ring right to me. The website is occfactor.com, standing for Orange Commercial Credit Factor.com. And email tcawthorn, CAWTHORN, @occfactor.com.
Great. Tina, thank you for coming on the program. I really appreciate it.
Hey, Tim, thanks for having me today.
Okay. You're listening to the Core Business Show. I'm Tim Jacquet, your host. Everybody have a great day, and thank you for listening.
You're listening to the Core Business Show, sponsored by Apple Capital Group. Thank you for listening to the Core Business Show with Tim Jacquet. For more information about equipment financing and asset-based loans, visit our website, applecapitalgroup.com. That's applecapitalgroup.com. Or call us at 866-611-7457. We hope you'll join us for our next episode. And remember, you can always get to the core via iTunes. You'll find all our previous episodes there. And thanks again for listening to the Core Business Show with Tim Jacquet.